Okay, so these are the supplemental charts for the weekend report review, December 1st, 2012. Now, a couple things when we were going through the daily and the weekend, some things that I was highlighting that I just reminded us of here. First, the 10-day min pain and max pain. Made note of Intel. We took a look at Intel and Hewlett-Packard from among the ETF 100. Talked about VIX and UNG natural gas and gold. In a summary of the swing trade setups, we looked at channeling signals in natural gas and gold. Overreaction had natural gas and gold. Natural gas was also a 5 days down. And then in the auto framer, things that test out better than 2-to-1 were Cliffs Natural Resources, the VIX, and natural gas. And then when we looked at the ETF 30 tactical summary, we noted that natural gas and the VIX both tested out on the auto framery better than 2-to-1, thus they're highlighted. So natural gas is very interesting to me. It's a channeling, it's an overreaction, it's a 5-day down, it's a max pain, it's a max pain range compression, number 2. It is a 3.1 on the auto framer. It was a big down day on Friday relatively, thus the signal or the symbol turns out. And it had an RSI2 value of 2, meaning that it closed horribly compared to the last 2 days. And because natural gas as a commodity tends to have very smooth swings compared to equities, that alerts us to a very interesting trade frame that's developing. Gold is interesting also. It has overreaction and channeling. It's number 4 on the max pain range compression, and it had an 8 on the RSI2 value. At the same time, when I look at the Dow Quality Report or we look at the Relative Strength Report, the same difference. You see Home Depot is near the top on the long-term quality, and it had a strong day Friday. And at the bottom, Hewlett-Packard is just horrible. I mean, it's not even close to anything else in the Dow. When you look at the system quality numbers from 1 month to 1 year ago, that's month -1 to -12. Its system quality number is -1. And the next nearest thing is -0.1 is positive. I'm sorry, -0.19 in Alcoa. And Alcoa has been horrible, but not anywhere near the horribleness that is Hewlett-Packard. And yet Hewlett-Packard had a 1-day pop. So we're going to take a look at both of those extremes. Okay. So now I'm looking at natural gas. And sort of a standard tactical framing for me here. I'll just cover that one time then. At the top, I like to put ADX14 just to get a sense of trendiness. And you can see in natural gas, the bears have started to win. And ADX, which had come down from 40 all the way down to about 18, has started just barely to hook up. This move up to 40, that's the kind of trend that natural gas can be in. It was you'll notice a sideways quiet channel breakout, and then a move from 19.5 to 23. That's $4 on 19. That's a 20% move. Yes, I'm interested in 20% moves. And then a move from 23 down to 20.5. So that's a 10% move. And then a 10% move from 20.5 to 23. And then a 10% move from 23 to 20.5. Now you'll notice that that's our 5-day down. Now it's above the 200 period moving average and just violated its 50. But the slope of the 50 is favorable and the river is just starting to fail. So that could actually be just a 5-day down, double bottom at 20.5, and then it can take off. And that's why we have a channeling signal here, as is also an overreaction signal. Now the negative on here is that jaws of PPO are closing to the downside. So or open to the downside, excuse me. And so what that says is a violation below 20.5 is an instant short. However, an entry above 21 is an instant long because it's channeling, overreaction, 5-day down, and an RSI2. So on evidence of price reversion to the mean, first looking at 22 and then a test at 23, then if it breaks out above 23, then we would expect to see another move potentially of this magnitude. So that's what UNG looks like, and this tests out at I think we three. This was 3-to-1 just on a mechanical entry. So an entry around 21 with about a 75-cent stop, and you get 1, 2, 3 to the 10-day high. So that's for my style of trading. It just doesn't get any better than that. Next up is Home Depot. So this is at the other end. Excuse me. This is at the other end of that relative strength. There's nothing but goodness here. Look at the river isn't just straight up. You can't even see the 200-day moving average, which is back at 53. And the 50 is universally up. It's out of the river. Every time it has never even violated the downside of the river. Most of the time it's finding support at the Bollinger Band mean, or the BB mean. And it made a new high at 65. Instantly long this thing if it goes up above 65. So that's the real difference between the high end of the curve on the relative strength chart. This is what Hewlett-Packard looks like. This is the opposite of Home Depot. Big sale, big pain. Every failure out of the river is punished. Doesn't even get back to test the Bollinger Band mean. And even when it looks like it's trying, no, that's why I don't hold that sucker overnight. However, I'm very interested in the extremes because not only do you get the potential of these piling on failures, but you get the possibility of overreaction buys. Big gap down puts it. This was a washout pattern here, and then it takes off. Now we've got 7 out of the last 8 days are green. Now it's back into the river, but follow through I still like it. It's got a tiny little doji, continuation pattern of 13.5 and 14.5 up to the 50. That's the tactical trade that's possible there. The jaws of PPO have opened. It's oversold. Overbought right now, but breakout above 13.10 is an interesting intraday trade for me. This big red candle was a day that that frog traders loved, but I like this. I like this move right here. So that's the other end of the curve, away from Home Depot, and that's not for the faint of heart. That is a pure tactical trade with nothing long term in favor of it, only pure tactics, whereas Home Depot is the opposite of that. Everything long-term, intermediate-term favors Home Depot. That's the easier trade, and that's why its reward won't be as great, but you could hold that overnight, I think, a little safer. Next up is the VIX. We had a long period of time here where it was trading between 40 and 34, and then now a break out of the river, and dropped it down to like 28. Now what we have is a potential trade frame tested back to 34, the Bollinger Band mean. And if you look at the last 2 days, you had a big sell-off, a doji, a frog kind of a day up, and now a target of 34 is feasible. Jaws of PPO are starting to close. I will only trade that one intraday, however. Next up is gold. This one's kind of interesting. This is really choppy, but big move down, which followed a big move up, a grinding move up, and now stabilized here at the bottom of the river. It looks to me like the river is flattening out. If it gets above 170, then the target is 175. A target to the downside, 165. I have to see, intraday, that's a tough play. I'm willing to trade it intraday on days when equities are weak. That one's trickier to play on a tactical basis. If I'm interested in gold, I'm always interested in silver. And so even though that wasn't on the charts of interest, anytime I look at gold, I also look at silver. Silver is actually a cleaner looking trading chart. We had a strong move up, strong move down, strong move up. Now, notice the volatility of the last 10 days. Big white candles, one big red candle. If this 32 holds, then this is a nice buying opportunity, and it's going to go up past 34 and beyond. If this fails, it goes back to retest 30. This is actually a very interesting support level. This level right in here now at 32 becomes very, very important. You can see the river is pointing the way north, but it's got to make that move here pretty soon. The river has started to hook up, but failure below 32, and I'm looking for a retest of 30. But I'm willing to buy intraday strength this way. Then I think it gets through 33, and then it's 34, and after 34, smooth sailing. Intel. This was number 2 on the week list of the 30. I mean, this is just horrible. I mean, it is from 24 all the way down to 19 and a half. I mean, how in the world does that happen? And it's forming a double bottom here. If it can hold, now I sort of like the target at 21 and a half, but fail low. I wouldn't be short Intel because they actually make things that people need. Oh, Paul asked me PPO. What does that represent? It's exactly the same as the MACD histogram, only it uses percent moves to compute the values instead of hard dollar moves. And what that does is it normalizes price over longer periods of time. So it's a better. It can be used on a relative basis when you're comparing different instruments, or you're looking at its own one instrument over long periods of time. So percent price oscillator. There's a good write-up on it in the free chart school at Stock Charts. All right, so that's Intel. Moving on. All right, now I'd like you to get a pencil and paper and be ready to take a look at my old buddy, Cliff's Natural Resources. I'm going to work up a trade frame for you, but I'd like you to commit to the idea first. Then you can compare your notes to my notes. All right, so what we have here is Cliff's Natural Resources for November 30th. The ADX reading is at 27. Now you notice it's ADX is improving, and it's all bearish. So when this starts really getting bearish, it's because of that move. That move is what causes ADX to go, and the bulls to decline, and the bears to improve. A couple other things to notice. You got the width of the river expanding, the Bollinger Band width. So this distance here to here is getting wider, and you notice the Bollinger Band mean is declining, and it is now falling below. The Bollinger Band mean is falling below the 50-period moving average. So that means the faster moving average in that case is failing faster. So it's failing faster. It's been oversold for long periods of time, and it can stay that way. Under the price oscillator, the PPO, the jaws of the dragon open to the downside way back here, and it's been down ever since. And that gives you this move right here. And see what else can we notice. The last thing, support and resistance levels. The previous support level was right about here, rallied and then failed, and now it's failing lower. So now what we have in Cliff's Natural Resources is what is to me a very interesting swing trade possibility. And I'm going to show you how I frame that trade, taking into account that information. And I'd like you to I'm going to give you about 1 minute to form a quick strategy on how you would trade this. And your choices are, well, you could not trade it. Say I don't like it. I'll move aside or step aside. Have a plan to trade it only or short only, or long or short based on price action and based on your frame. In either case, or in any of those cases, what information is important to you? What kind of price targets would you have? What kind of entries? And start framing that up. So I'm going to give you 1 minute starting now to work your way through that. $30 remaining. 15 seconds. Okay, does anybody need more time? Okay, here we go. All right, this is the trade frame that I put together. So a couple things I want to highlight, just the way I normally do it. First thing I do is I draw the vertical blue line to show the day that I'm interested in framing. That's this one. And then to me, the time frame that looks interesting is this one. That's the I look like there was this big sell-off and then it got stable here for about 10 days. So really, I see that as the top of the reasonable price range. This was a hurry up to find a new price level that everybody could sort of agree on. This failure here, and I think in this region is where that price stabilized. So that's why I make that the top of my box. And then that's at the top of the box is where I put a purple line to show my target around 37. That's the Bollinger Band mean and the 50 period moving average. That seems like a natural place to aim for. If this is going to work from on the long side, then I have to have a reasonable belief that it can get there, and I think it could get there. Also, if it got there, I have a reasonable belief that that's where everybody that bought it inside this congestion zone is willing to get their money back and get out. So anybody that bought inside this cloudy region is now suffering all the way down here, and if they were able to hold on and it bounced back here, that might tempt them to just say, you know what, I broke even, let me get out of this pig. And then that would trigger a bunch of selling pressure, which could actually be enough to cause it to come back. If that selling pressure is not convincing, though, like a washout pattern, it can actually go up here, and then the second leg would be up to 45. But I'm not even playing for that one yet. Let me see it get through that first. Okay. So now what I'm going to do is, I like this little doji. I see the first thing I'm going to do is I'm going to draw my risk. So first I drew my blue line, then I drew my box with the reward. And now I'm going to draw my red line. I'm just going to pick the swing low, which about coincides with that yesterday's low and also the swing low. Let me see if I can zoom this up a little bit. There we go. That's probably a little easier to see. Okay, so now I've got my blue. I've drawn my blue box to estimate my time frame. Found my profit target or price target. Then drew my risk at the bottom of this. Now, because this thing is such a hog, a failure below 28 is an auto short, because there's nothing over here that provides support. That's just continued free fall. That would actually be the easiest trade of all. Because when you get those kinds of breakdowns, these are the kind of one-day moves that you get in the natural resources. So I'm really not worried. Even if I go long and then it fails, I'm going to stop and reverse at 28. Just because of that fact. So hopefully that's clear. But if this thing works against all odds, I'm now ready to enter at about, looks like 29.6-ish. And then I could actually see, if it could get to 32 easily, edge of the river. It could get to the midpoint of this, 34.5. That would be awesome. And then it could get all the way up to 37. So any one of these three areas, if it were to hesitate, I'd be willing to cash this pig. But I'm taking that trade frame because I have a very favorable reward to risk. So if this is one risk, we got 1, 2, 3, 4, 5, 6. I think on the auto framer it tested out at 6.5 to 1. So I mean, You know, if you're afraid of 6.5 to 1 reward to risks, it's probably because you're trading too large, and all you can see is the probability of it filling here. And if that's the case, don't take the entry. Just tell yourself, hey, I'm only going to go short on this thing if it fails through 28, and I'm not interested in the long side on a tactical trade, and there's absolutely nothing wrong with that. However, for me, I don't want to give up the possibility of this 6 to 1 reward to risk. Okay, so that's my trade. I'm ready to go long or go short. I have my entry and stop in. That's bidirectional. I've estimated what I think reasonable price targets in here. I'm taking into account tactical moves and as in the tactical normal, which is described by the river. But I like the fact that it's finding slowing down its fail outside of the river, and then just a return to the mean gets you to 36. Not bad. Okay. Moving on then. Okay, now I want to take a look at Facebook. The reason to set up some of these swing trade frames is because they can give you insights into things that are happening on a long-term basis, which then become tradable intraday. This week during the chat room, and really at the end of last week too, or the previous week, we kind of observed this phenomenon in Facebook. Said, well, there was a ceiling at 34, or I'm sorry, at 24, and we had this kind of sideways quiet channel thing working, and we noticed this little breakout. Got really interested in it when it broke above the previous swing high, which was the last time Facebook traders got trapped. And then since then, it's given this really nice move. Even if you just waited to see the price move after the breakout, there's nothing wrong with that as an entry at the opening of the day and getting the frog move up, and then holding some overnight and letting markets money work. This looks really favorable. The other thing I want you to notice, take a look at our good friend PPO, percent price oscillator. It went from oversold on Williams percent R10, this very narrow range PPO in this long sideways quiet channel, and then right in here you get this breakout from sideways quiet channel confirmed by PPO. The jaws have remained open all the way up. So percent price oscillator is pretty cool. The other thing I like too, this whole idea of the river sideways quiet channel, and now notice the Bollinger Band width expanding to the upside, and now notice the Bollinger Band width, or the Bollinger Band mean, is above the 50, and the 50-day average dropped down, and then now it's starting to roll up. We know that a positive slope to the 50 is good, and that happened also right about in this area. That's the thick blue line in the river there. So Facebook is pretty interesting as a tactical trade. What got us interested in that was this chart. This is a daily look at of SPY and then Facebook. And now this is the daily river, and the ribbon, that orange line, that's the 2-period Bollinger Band, a nice proxy for price. And what I want you to notice is that over the same period of time, just by visual inspection, you can see the difference in the S&P and Facebook. The first one is this. In this block, the S&P was down. In that same time period, Facebook was sideways. So that's an improvement in terms of relative strength. Here's that price level at 24. Here's the breakout from above that. And now Facebook is up and going at the same time that the S&P only just got back into the middle of the river. Facebook is already off and running. So I think that's the new tech darling. People are willing to hold that rascal overnight. About 2 seconds after I posted that chart, I shifted down and said, well, you know, we got an hour before the close. Let me see what's going on in Facebook. Now, Facebook was up that day, and this was the moment when in the green circle, that's where I made the observation on the daily chart, and I saw it breaking out, so I bought it. It was going up. It had come back and tested the river, and then broke out again, so I buy it here, and then a 2.5-hour follow-through just into the close. So that's a case of turbo. You can take a daily trade frame and then have reason to be interested in that kind of a move. Now, if you didn't get this whole move, that's fine. But there was a regression line crossover right there. There's a breakout from sideways. Excuse me, a breakout from sideways quiet channel as well. So that was a nice intraday trade, and it doesn't have to be anything more than that. Just take your 2.5 hour and be happy, and trade it the next day. This was the reason shortly afterwards to be interested in Cliff's CLF, and that's the one we just practiced before. That's that powerful move down on a daily chart, and that's why it became interesting to me again. Excuse me. All the history is gone. Everybody can see it going down. That's why it becomes interesting to me, when it's obvious that even I can see it. Just like it was obvious over here that it was going down. Obviously it's going down. Oh yeah, so it does that. The day of trading Facebook, this was the tactical trade on that 2.5-hour thing. The S&P was basically sideways but had a slight upward bias. The small caps were doing better because they finally got out of the river. But Facebook at the same time broke out a sideways quiet channel and stayed pretty much out of the river the whole day. So on a relative strength basis, everything was favoring over here to Facebook as a preferred way to take advantage of the sectors. And then this was my tactical stack over here, and Facebook was number one on the percent gain at that moment. So just let the signpost show you where the fast traffic is going. So this was the trade frame in Facebook. Blue vertical line is where I'm stalking it because it's in the river now. This is sideways quiet channel. You could, I guess, take 2651. I waited for it to get above the double top here on a ribbon, and I bought it instead in that green circle at 2665 with a 20-cent stop, which is down here at the red line. That's enough information to tell me that that move was failing and it's time to go the other way. But it didn't fail. It turned out to be good. The actual trade then, as it unfolded, was this. Here's the entry. There was that black line that it cleared. Moved in an orderly fashion. Never, ever tested that 20-cent stop. Then it started going into the sideways stuff, and then by this this area here, you got the regression line crossover. So I take my exit here at 2690 and cash 1.2 R. Take the easy part of the curve. So I waited a little bit longer because I wanted to clear that resistance point. So it's entering here. I entered here. So I gave up a little bit on this end, which I was paying for confirmation. And so in my view, on intraday moves, this is TNA, so that's leveraged small caps. You got this move in the 30, this endpoint to here to this regression line crossover, up to this something that's emerging to be a regression line crossover. You know, what happened on the net on that thing? I mean, net, nothing. It moves down and then moves back up to the same price level it was from 11:30 to 1 o'clock. So in that 90-minute period, it goes from, call it 58 to 57.20. So an 80-cent move here. This indicators is a way to start going after that 80 cents. And if you use a 25-cent initial stop, you can get, that's a 1 reward to risk ratio because you're risking down here. And now you're getting 3 of those moves to the upside. So you have to have rules and strategies for making money during those kinds of routine moves intraday if you're going to be an intraday trader. So here's some management in SQC with UVXY. Right. So we're back to 3-minute charts. And this is on November 29th. I think that's Thursday. So we had the beginning of SQC occurs right in here at that blue circle. Why? Well, because it had been coming down and then started going sideways, and now you got the 30 period regression line comes back into the river here. And so now you have the 30, you have the 10 period regression line, which is the blue line. You have the VWAP, you have the price, you have all of that. All of that is inside the river. So SQC starts at that blue line. And it goes over to here, and that's when the ribbon leaves the river. So again, SQC starts at that blue circle when the 30 is the last thing to come back in. I found this interesting that the 10 came down and the ribbon came down, tested the bottom of the river and didn't fail. Came up, tested the top of the river. The ribbon never left the river. Came back, tested the Bollinger Band mean, the river mean, the BB mean. Tested here, and then breaks out. And now by this time, the 30 has started to move up as well. So I love this entry right here at 1930. So I get the entry here at 1930, and I got to stop below the Bollinger Band mean, which is also below the VWAP. That's 30 cents. It runs immediately up to 1980. That's 1.6R or 1.7, something like that. And then we get this exhaustion bar, and then the second one, I'll say, you know, that's enough for me. 1960, because if this rolls over, then I think it's coming back to the Bollinger Band, and then I'm going to scratch or lose some money. So I'll just go ahead and take my exit at 1960 and take 1R. Well, no sooner do I do that than it comes down to the 30, then stabilizes, then the ribbon reverses and goes up, and I say, you know what? I'll re-enter this thing at 1940. And the difference is I got 1R in hand, and it only cost me 10 cents of price disimprovement, if you will. So I like having that 1R in hand, and then a second entry, and then if that one works, it could be big. And why is that? Well, it could be really big. All I got to do is get above 1970, and now it's a new high for the day. That ribbon has been eclipsed, and now this thing will really go to 2020. So we would have had a swing low at the bottom of the river, swing low, the Bollinger Band mean, swing low held at the 30, which is near the top of the river, and taken off again. That's 3 higher lows, and that thing could really go. So I like cashing this 1R here because I'd rather have 1R than a scratch. And then I'm ready to re-enter if I see some favorable price action, with the idea of getting 2 or 3 to 1 if it breaks through this high over here. Okay. But it doesn't. All it does is come back and scratch. So, so the entry was here. It got up to 1970, failed, 1, 2, and now the ribbon is expanding and failing, and there's a regression line crossover. So I got to get out. So my entry's at 1940, my exit's at 1950. I make a fraction. Taken together, that little choppy price action is 1.3R. I'll take that all day. And the possibility, though, was that if it had gotten above this congestion zone, this thing could really go. So it didn't really go. So what? I get paid for taking the for framing the trade and taking a shot. Here's another one. This is a regression line crossover. This one is also in UVXY. Intraday 3 minutes. This is UVXY. This is from Wednesday, the 28th. Had a regression line crossover here. It continued to fail. When it held support and entered back into the river, I decided to buy it at 2015 with a 30-cent stop. It it grinds higher and then fails to follow through. I'm hoping that it's going to get to the VWAP. That would be an awesome trade from 2015 to 21 on a 30-cent move. That's a 3R move just to get back to the VWAP. And if I hadn't bought it down here, I'd certainly like to buy it up in here because now it's breaking out of the river, right? But it didn't. And then it started rolling back into the river. I said, you know what, just let me take that. I'll exit at 2030. Just take my little half R and get paid for taking a shot. Failure to follow through is information. Don't stick around. And the reason not to stick around is this one right here. Immediately after that move, this move where it failed right in here and get out, this is the next move that happens. You want to stick around and try to will that one to go higher? No. Now what we got is a sideways quiet channel, fails at the top of the river, breaks out on the downside, and now you can get short this thing at 2010. Now notice when it breaks down below 1995, the previous swing low, this thing is doubled to the downside. And you already want to be in that position for the easy run down. And now at the bottom of this thing, it puts in a bottom, and now it's going sideways, and the 30-period regression line is catching up. If it just stops around sideways, pretty soon the 10 is going to come up, and you get a regression line crossover. You can already see the 10 has started to hook up. That's a 3R move to the downside. That's the reason you don't stick around up here. This signal to exit, this regression line crossover signal to exit, is also the signal to say, hey, the aggressive guy can already start looking to short that. That's your first signal to potentially short. Second one is here. Third one is here when it breaks down to a new intraday low. So that's only 2R. So wait for that one. Now, if you can't go short in your trading account with UVXY, then there's an option to go the other way with SVXY. This is the same move, but it's in the inverse of UVXY. And so here's if you had waited for that 2010 for breakout from the river, you get this, and it never comes close to testing your low. That's why if it fails, who cares? If it fails, just get out of it. Failure to follow through is information, and this thing, if it fails here, could be a move like that. So give it a shot. Sometimes it works. When it does, it pays all your tuition for these little try and fails. Now you can try to do better on the try and fails by looking for the fractional wins like I showed in previous ones, but that's a reasonable approach. You never know which one it's going to be because the market doesn't know. People have to vote. But because that potential happens, you can give it a try, and if it doesn't work, just get out. It's a lot. You paid your ante. You didn't draw any cards. so don't stick around. Okay, so I went a little longer than I wanted to, but my voice was feeling better than last week. So I'm going to shut off the formal presentation there and just stick around for a couple minutes for your questions. So, I recorded this one. Let me stop recording it, and then I'll get this processed and hung on YouTube for you. So hopefully you enjoyed that. I'm going to try to do more things like this in the future with the with the weekend webinar for members, and that I'll record the the drudgery of the reports and try to spend a little more time on taking the ideas out of the report and then framing the trades and then connecting that to trades of the day and trades of the week. And hopefully that'll start adding a little more value for you. So so there it is. Thanks, guys. You take good care. Mark, you may end up seeing a version of that tomorrow, some streamlined version, because I sort of like the way that went. So I will treat that as a process of reflective learning, connecting ideas to action, to risk-adjusted action. Okay, so take good care, guys.